Hello, welcome to the Real Estate Regroup Show. I am your host, LJ Walker, a real estate investor helping you realize your dream of owning a home or investing in one. Today's show, I'm going to be speaking about REITs, and there has been a little discussion as to whether or not one should invest in tradable REITs or non-tradable REITs. Some people feel that you should just stick to one as opposed to the other. So let me first tell you what REITs are for those of you who don't know, and then I'm going to add my 2 cents at the end. Okay, what is a REIT? A REIT is a real estate investment trust. It's a way in which you can invest in real estate without doing any maintenance. You do not have to find the deal. You do not have to rehab the property. You don't have to find contractors, tenants, homeowners, etc. They are subject to market risk. So yes, it is. You can lose your money, to be quite honest with you, depending on the situation, depending on the market, and also depending on management. Okay, so now that we've got that out of the way, let's talk about what are tradable REITs. Tradable REITs are REITs that are available to everybody. They are normally found on such brokerage platforms as Vanguard, Fidelity, Motif, and I think Stockpile has one. And they're also on other brokerage platforms out there as well. You can easily sell them at any time. They're very liquid. The interest gained, though, is normally lower than if you were to invest in a non-tradable REIT or a private REIT. Not always. There are times when they actually do match up, but for the most part, it's normally lower. There's normally a dividend that's paid. Dividends vary depending on which REIT you choose to hold on to. Normally, with a traded REIT, you are investing in the stock of a company that invests in real estate, and normally you're investing in more than one property that they may own. Okay? Now, listen, keep this in mind. Even though you can sell them at any time, the shorter time period in which you hold on to them, the higher your capital gains tax is going to be. Okay? Typically, it's been my experience that they don't do all that great in a recession. When the market is good, you can get really nice returns. But sometimes when you hit a recession, especially that last one we went through, many of them were not doing so well. Okay? Now, let's talk about the non-tradable REITs. Okay? Non-tradable REITs normally don't follow the stock market because they are based on location. And a lot of times, not always, a lot of times it's based on one company and their properties, or it's based on just one property, period. These, particularly the public non-tradable REITs, you can find them on sites like Realty Shares, Mogul T REIT, or, I'm sorry, not Mogul T, Mogul REIT, or AHP. The interest rates are normally, in my experience, a lot higher than the tradable ones. They are not liquid, and it is required that you keep your money in them for 3 years, particularly the public non-tradable REITs. If you withdraw your money out before that time, then you are normally hit with fees plus the capital gains tax. Now, you also have private non-tradable REITs. These are REITs that are normally formed by other investors, and you can find these investors in places like the Real Estate Investors Association. The ones that I know, they actually don't require you to have your money in for 3 years. They normally require either 1 or 2 years. The amount of money that they want is a lot higher than what is required for a public REIT. They normally want $25,000 or $50,000 minimum. Okay. Now, the other way to get into some of these private REITs is to be the deal sponsor. If you're the deal sponsor, you don't put any money in, and there's normally just either 1 or 3 of those. And as a deal sponsor, you're responsible for finding the deal, for building the team, repairing the property, and to an extent, depending on how you have it set up, you would be responsible for managing the property or for managing those who are managing the property. You are given a finder's fee after all is said and done. And if the deal makes any money, then you are given a percentage of the profits. Sometimes the returns on these are higher than the public non-tradable REITs, and they're definitely higher than the public tradable REITs. So here's the argument that I'm seeing. A lot of people feel that one should not invest in non-tradable REITs at all. They feel that the fact that you have your money tied up for so long is not that great. And they also feel that the interest rate that you make is not much higher than the interest rate that you make on a tradable REIT. I disagree with that, because from what I'm seeing, a lot of these tradable REITs, you can make maybe like 5% on your money. That's the average. However, in a non-tradable REIT, I've made as much as 12%. And I know people who put their money in a non-tradable private REIT, and they have made 20% back on their money. Because basically, with the private one, it's sort of like, well, who do you know, or who are you connected to? Who's in your network? That sort of thing. So I don't think that it is fair to say that everybody should just do tradable and not do non-tradable. The other reason why I don't think it's a bad idea to invest in non-tradable REITs is because some people are just extremely busy. They don't have time to continuously analyze the market on a quarterly or monthly basis. Some people, they have their own criteria, or they have their own thing as far as how they manage their money. Some people don't have time to put that much effort into managing money. Some effort is definitely needed, but they don't have time to be analyzing and things like that. And when you are invested in a tradable REIT, it is advisable that you look at it quarterly, right? So that is why I disagree with people who make a blanket statement like that and said nobody should invest in non-tradable. Disagree. You can, if you want to, look at your lifestyle, look at what you, first of all, can you even afford it? Because most of them are a little bit more expensive, not all. Because was it Mogul Read or one of them? I think I only put like $1,000 in that. But one of the traded REITs, I had to put $2,500 in that. Okay. Those are the two public ones that I just mentioned, public traded and public non-traded. So some of the public non-tradable ones are actually cheaper than the public tradable ones. But the private ones, I'm going to let you know that those are almost always more expensive. You are locking up your money for a long time. So you do seriously have to think about whether or not you can afford to do that, number one. And number two, you really should look at, okay, what is this company holding? Meaning what type of real estate they're investing in. Because all of them, first of all, don't invest in homes. Some of them invest in apartment buildings. Some of them invest in storage facilities. So you need to decide, what type of real estate you want to invest in when you're choosing a REIT. You want to also look at the management. How many years have they been around? And not only how many years they've been around, but how many years have they been successful? You also want to look at, when you look at the properties that they have, you want to look at what market, what is the location? Where is the location of those properties? What state? What city? And if you can even narrow it down and find out information as far as, is the property located in a relatively busy area, in an area where people want to live or want to do business, or is it in the outskirts somewhere in an area that you're not familiar with and maybe not too many other people are? So guys, that's basically my 2 cents. I really feel that it's a lifestyle choice as far as, do you have the money and do you have the time? And I don't think that it's right to just knock out non-tradable and say it's not good for anybody. It just may not be good for many people, but to make a blanket statement like that, I just think that that's a little bit too excessive. Okay? All right, guys. Well, now you have my opinion. There it is. Remember, feel free. You can share this, discuss this amongst your friends. If you have any comments, you can go onto my YouTube channel called The Real Estate Regroup Show and give me your opinions and let me know. I'm interested in hearing how you feel about this. All right. Until next time, I'll be back. Have a good night.